In today's episode, we are going to be going through 5 key things that you need to know, think about, and be putting in place if you are a business owner, a solopreneur, an entrepreneur. Basically, if you're not on a salaried role,
A freelancer, a contractor, yeah.
the whole thing. What do you need to know? What do you need to put in place to make sure that you are able to get a mortgage and buy a house if that's something that you want to do? Welcome to another episode of the Property Podcast. I am loving this series. It's so fun to be able to talk about a different asset class. I mean, it's been years that we've spoken about the stock market, so to be able to really dive into property, I'm loving. The Property Podcast, if you have not listened before, is for anyone, regardless of where you're at in your property journey. So if you have never bought a house before, if you're trying to buy your second house, if maybe you're looking at an investment property, this is designed to be super helpful regardless of where you're at in your journey.
Home ownership can feel pretty complicated at the best of times.
And if you're self-employed, it can feel like you have to submit your life story. I'm talking a blood sample and your receipts from like the last 3 coffees just to prove your income.
The good news is BNZ Home Loan Partners deal with this stuff every day, and they can support you through the process from search to settlement.
So instead of guessing what you might be able to do, you can actually see what's possible for you and navigate the process with a bit more confidence.
Because no 2 paths to home ownership look the same. You can be self-employed, employed, buying with a mate, buying solo,
Or lining up your next investment and pretending that you're just browsing.
Whatever your situation, there are tools and options that can help. If you want to talk it through, book an appointment with BNZ Home Loan Partners and get started today.
So today we are talking about mortgages. Mortgages, I wish they had a cooler name. It reminds me of like wart or something. I don't know why. Mortgage.
It's like a house loan.
Yeah, that's kind of cuter. I like it.
It's like your Propel wealth loan, you know, like it helps you leapfrog.
Yeah, your leapfrog loan. Oh, I like that. That's quite fun.
Work in progress.
Work in progress, yeah.
Yeah.
We're talking about mortgages. I would love to know why they're called that. It's whoever named it really could have got more original. But so for anyone that has missed any of the property podcasts, so we do one a month, and it's really fun to have like a dedicated time just to talk about property. The reason it kind of came about, honestly, was because I was so determined to get a house. What is your face? Vic's just doing a really funny face.
Oh, I've just Googled, why is mortgage called mortgage?
Why is it called mortgage?
It comes from the word, an old French word, mort is dead,
Oh, God.
and gage is pledge.
Dead
so
pledge.
a mortgage literally means your dead pledge.
Oh, no wonder.
Why? Because back in the medieval times, the deal was basically if you paid back the loan, the pledge was dead, so it was like finished and gone forever. Or if you didn't pay it back, the lender kept the land.
Oh, whoa.
So it's all about the pledge dying, like because you eventually pay it back, not
Holy
you dying.
shit. It's from
Interesting.
medieval times.
Wow, that's a pub quiz question,
That's
surely.
a really fun fact.
Yeah.
That's a really fun fact. Also, it's so weird to even think in the medieval times that they were buying houses.
I
know that
know.
sounds like such a naive, privileged, closed-minded thing to say, but the idea of the medieval times, it just feels like a fiction book. I just cannot even imagine living in it.
I remember when I bought my house in New Zealand and I had to fill out, it was for insurance, and it was like, when was the house built? And I looked up and it was built in 1910.
Which is quite old for New Zealand,
And
right?
then I Googled 1910 people, and it was people in like corsets and like, it was kind of horse and cart type vibes. And I was like, wow. And I looked at my hallway and I was like, wow, those kind of people would have been walking up and down my hallway. Yeah, it was quite cool.
So bizarre.
I know. I was
Don't
like,
you
if
think-
they could see us now. And then I was like, wow, imagine what people would think in another 100 years' time when they're going.
They look at our outfits.
They're looking
and
at
like,
2025. Oh, wow.
back
Thinking,
in the
yeah.
day when they lived like that.
Yeah.
I always think that because when I think back to ye olde ancient times,
Yeah.
I think, if I think of 1910, I'm like, oh, 100 years ago, not that long ago.
Yeah.
But then you look at how they were living and what they were wearing.
And how far we've
it
come.
blows your mind. So then to think of the medieval times, I mean, when was
know.
that? Oh, 500 AD, roughly 500 to 1500 years ago.
Wow.
So if you think about the horse and
I
cart,
love medieval
making
movies
your
and-
own butter and wearing corsets was only 100 years ago. Imagine what life was like 1500 years ago.
Yeah.
Oh, it blows my mind. No electricity, no running water, no heating except for fires. They didn't have any medicine. Do you know what, though? I will say, at the time, they must have thought, God, imagine living 100 years ago. You know, maybe they wouldn't have had any context, though, because you wouldn't have had the internet or history books. You wouldn't have known.
ChatGPT.
Yeah. Maybe you didn't know it.
Yeah.
I do think there's ignorance is bliss. What you don't know does not hurt you.
Imagine just knowing your village and that's it. How beautiful.
It'd be much easier to find a husband, wouldn't it?
Well, you'd have a pick of probably one person.
Fine. Don't give me options. I get overwhelmed.
Well, they wouldn't know they had options either. So they would think you're amazing. You'd think they're amazing.
So true.
Yeah.
They're
not sitting at home scrolling on social media.
Oh my
DMing some other
gosh.
chicks from another village.
But the fact that mortgages have been around since this time is quite crazy, isn't it?
Yeah. God, even trading, you're trading commodities, you're trading coal, you're trading gold, like all of that.
Well, I guess a mortgage back in the day would have been things like, cattle or animals or things. It wouldn't have been probably money, right? It would have been
houses.
But they would have been buying the houses and paying their mortgages off with stuff like animals or sugar or here's some flour.
Yeah.
So I guess, this is actually really not what we had planned for this episode, to talk about the medieval times. However, fascinating. And I do think, when we talk about different asset classes or growing wealth or investing in things, to think that having a house, having a home has been something that people have wanted to invest in since the dawn of time.
Yeah.
Is a really interesting way to think about it.
People have wanted security, they've wanted land ownership, like all of that, and then what it means in terms of independence and freedom. Yeah, it is quite fascinating that is still such a tangible thing that people want.
And the way that you can pay for it and the way that, the deposits that you put down and who you're buying from, all of that's changed, but the premise is the same.
Yeah.
And, the fact that mortgages, the deed is dead once you've paid it off. Honestly, when you first said that, I thought it's because probably most people have died by the time it's paid off.
Yeah.
Which, to be honest, if you think about it, for most of us, getting a 30-year mortgage, which is pretty standard, that's, you're quite old by the time you've sorted it out.
Imagine walking to a bank and being like, can I please have a deed pledge? And they'll be like, sorry, what? I'll be like, a deed pledge. And they'll be like, sorry, I don't know. A mortgage, duh.
It's a bizarre but ancient concept.
Yes.
You want a thing? Cool.
I have some money to help you get that thing. I will lend it to you and you will pay me an interest rate to compensate for my loan. It's pretty standard amongst lots of things now, right? Yeah.
I think when it comes to a mortgage, it's really important to frame the whole thing. I know that this entire conversation I've been like, mortgage is such a scary word. What I really don't think helps anyone is to be scared of a mortgage. It's kind of the reality. It comes with the idea of owning a house. I think for me, I didn't stop and allow myself to freak out about it and I know you did when you first went into debt. It was like, wow, it's a lot of debt.
I think just the number on the screen, when you go into your bank account, all of a sudden it's like -1 million.
I think that's why I don't have it on the same, like I have it in a different bank for that reason. Because I just don't need to be seeing that every 5 seconds. Out of sight, out of mind. But the entire point of this episode is to essentially talk about home buying and try and make it less scary, particularly if you're not on a classic salary.
Yep.
Because traditionally, most of us have gone for our, what's it called again?
Deed pledge.
When we're in a salaried role. And over the last 10 years, more and more people are freelance, more and more people are starting their own businesses. And unfortunately, because you're getting your deed pledge from an institution that has been around for a while and has really traditional ways of like proving whether or not it's okay to lend you money and like sense checking and risk, doing a lot of risk analysis to make sure that they're not putting themselves in, a terrible situation by loaning you money. I think that there's not as much awareness around how to apply if you're a self-employed or business owner. And for me, going through this process was a very steep learning curve. Was quite frustrating, if I'm being totally honest. I found it really quite hard, and I think it's just because I didn't have the facts or the knowledge far enough in advance to be able to prepare for the moment I then wanted a mortgage. So it was kind of reverse engineered.
Because I think that's so true, right? The process starts before you walk into the bank. Like the process starts in terms of like, okay, get your finances in order, pay off your debts, make sure you've got consistent, just get your... We're going to go through it, but I get all your documentation, all of that. So that it is a much more easy, streamlined process. But you're right. Like these institutions have dealt with people that have been salary jobs forever and ever. So of course that's how their systems are set up. And now you've got these people being like, I've got 3 businesses. They're like, computer says no.
Yeah. And I think.
But how was that process for you? Because I was a salaried employee when I got mine.
Yeah.
And so now would be quite different, I think.
It is really different. I had talked about wanting to get a mortgage and buy a house for years. Before I moved to London, which now was like 3 years ago, my goal, I wanted to have a house before I moved. It felt like this, not just tick, but it felt like a really clever thing financially to do, knowing that it was going to gain value over a long period of time. And I knew most people moved over to this side of the world, and unless you're a banker or a lawyer, you're not exactly making stunning money. And I didn't want to come back as the idea of coming back with no money, nothing to my name,
But having had a great time.
I just didn't want to be, that person that was like,
Sometimes it's good
I bought just memories. And I'm like, I want memories, but I also...
And I left just footprints. It's like, shut up. I think it's good sometimes to put deadlines in.
It was a goal. It was basically giving myself a
deadline. I think is really good in terms of...
I didn't make the deadline. I left.
You kind of did.
No, I didn't. Remember, I left New Zealand. This was 3 years ago.
Yeah, true.
So I left New Zealand and I was like, damn, well, there goes that dream. And it was because we'd just started, the curve had been going for maybe a year and a half.
Yeah.
And we were not paying ourselves enough. But I look at this now and I think if I'd known what I did at that time or when we first started the curve, I could have applied for a mortgage so much sooner. I had in my head that as a business owner or unemployed, as a self-employed person,
it's way harder.
I kind of thought it was impossible. My mindset towards it was if you don't have regular salary, so like the same amount of money coming in for 2 years minimum, don't even think about it.
I feel like that is a myth that we've been told. Because I definitely heard that as well.
I can't remember who told it to me, but I just had it in my head that there was just no point in even exploring it. So I never even had a conversation with a bank, with a mortgage broker. I never considered it. I just thought, I've started this business. This is what we're focusing on. And like the house thing's just going to have to take a back seat.
And I think that's such a good thing to do, right, is to engage in a mortgage broker like as early as possible and be like, okay, this is my intention. I want to have a house in the next 6 months. What do I need to sort out? And they'll be able to tell you, okay, well, red flag, you're, I don't know, taking money out of your credit card
to buy margaritas on a Saturday night.
They're like, no. Or you've got a terrible credit score. You're going to need a high deposit.
Pay off your fines
they're just like, they'll be able to kind of give you full visibility. And the great thing about mortgage brokers is that you don't pay them. The bank pays for them.
You just mentioned do it 6 months before. I honestly think even if you feel years away from being ready to buy a house,
true,
but you know it's something in the future that you would like, I wish I'd done this 5 years ago. So having conversations and just knowing what you need to have in place, I think is super important. And what we'll get to later in this episode is the sorts of things and the ways that your business needs to be set up to be able to position yourself properly for a mortgage. But basically what happened for me is I hadn't had any conversations with mortgage brokers, with banks, nothing. I just had taken almost like in the same way I genuinely thought your eyeballs popped out of your face if you sneeze with your eyes open. I just believed that from a child because someone told me once and I always believed it. So I never did any digging to figure out that's not true or you actually could think about a mortgage.
So funny what we believe
and
just run with.
Well, also I think that the amount of people that have gone for mortgages as a self-employed person is less, so you don't hear that many stories.
It's like you're going to lose all your money in the stock market, and then everyone just thinks
don't invest in the stock market.
Never invest in there because I don't want to lose my money. It's like no.
So I didn't have a conversation, and then when I got to the point where I was like, okay, I've got a deposit. I really want to make this happen. Luckily, we'd set the business up in a way that was not a lifestyle business. We were absolutely not putting Ubers and dinners out or our rent or things through the business.
We had a very strict expense policy.
But, and again, that's, I think, the difference between if you're running a business.
That's one of the key things, right, is to separate your personal and your business because trying to unwind that for a bank is so difficult and can take months, if not years.
Also, where's the proof? You kind of have to, you can be like, oh, I paid for this is what it was for, but it's messy.
Yeah.
And so when I started having these conversations, I went to mortgage brokers and because I was based in the UK, so I had UK salary. If you're overseas, it's really hard. They'll like for me, I know they halved my salary as their baseline for what they were considering.
Just like, wow, in this day and age, overseas income is not recognised as legitimate income. Do you know what I mean? Like even when I was applying for a rental here in the UK and I had all these savings in New Zealand and they were like, oh, no, we can't take that. And I was like, but it's money. Just because it's sitting offshore doesn't mean it's any less valuable. Like, I don't know.
It's where crypto is going to come in, I think.
Yeah, it's just so...
It's very archaic. So I had a bunch of conversations with mortgage brokers and they said, I just got a straight up no, you're not going to be able to do this. And it was frustrating because it wasn't just the idea of us being...
What about that lady? Didn't she laugh at your face?
Yeah. And she was like, I'm the best mortgage broker in New Zealand. If I can't make it work.
Shout out to her, whoever she is. Sophie has 2 houses.
Yeah.
It's like my English teacher when I failed English. I failed English miserably. I absolutely hated it. And then when we got offered
a book writing deal.
Like 2 book writing deals.
Did you write into your English teacher?
No, but I wanted to do it just to spite.
Yeah,
you know?
yeah.
Look at me now.
Sucker, see my name? Yeah. Where's yours? Do you have a book? I had a few conversations. She was really incredibly, I would say condescending and also quite...
Which from a female, I'm not saying that that's okay to come from a male, but where's the... female
Where are my girls at?
Yeah. Where are my girls at? We gotta lift each other up here. You know, like honestly.
It was a shame because I think had I not been a dog with a bone, I would have probably just taken that as gospel in the same way I took as gospel that when I, when I was just working for myself, I couldn't even think about having a loan.
Which is sad because so many people would take that and go back and not fulfill their dreams be really gutted. But,
I think it's a really good learning for anyone that wants to buy a house. If you know anyone that is thinking about buying a house, or maybe they're just self-employed and they don't have a home yet, I think it's really, really important to send them this episode so that they know it's possible and to start thinking about it because there are heaps of other things you can invest in. We all know the stock market's amazing. There's crypto, there's gold, there's so many things you can invest in, but I've forgotten it again, your dead pledge, i.e. your mortgage, is an amazing way to propel your wealth and to be able to compound returns.
So don't listen to anything anyone says apart from this podcast.
Yes. But I ended up actually being, I was really lucky. There was the private wealth team that ended up working with me on my mortgage because there was just so much complexity. I think it's really different if you're locally in a country and your income is coming from that country. It's very different. I was a business owner based in London. There was many hurdles to jump through. So it was quite different for me.
Yeah.
I definitely didn't go through it the normal way. But I think that in itself was a really important thing to note. There are different groups at banks or different, there is a wealth team. So then if you have a really successful business or your business has heaps of money in the bank or you're just in a unique situation, I think remember if you get computer says no, there's lots of other ways that you can prove your validity of getting a loan.
Don't take your first no as the end of your dream. And I think that's really important. If someone says no, go talk to someone else.
Yeah.
Talk to a whole bunch of people. And if anything, it's going to be information gathering that you can take on board to improve your situation. So then you do get some yeses down the track. But I think when it comes to, being a freelancer, contractor, business owner, there is a way. It's just not a straight line. It's a little bit more wiggly. So you just need different levels of proof, I think, as well. As kind of
being prepared in advance.
Yeah.
I think that the last thing you want to do is try when you haven't done any prep and then be trodden on and lose faith and then not try again.
And I think it's not as common, and that's why there's a bit more steps you have to go through. Like, it might seem common in your group of friends or your community, a lot of people owning businesses or being freelance, but, overarching, like over time and also within a country, like it's not that common. It's not as common, sorry. It's way more common for people to have salary jobs, and therefore the road is much more straight line.
I also think the hardest part is the emotional roller coaster of will I, won't I? Because I was an emotional wreck throughout this time. I found it so disheartening to be told no. But if I had known, again, sorry, I feel like I'm hammering the same point home, but if I'd known in advance what I needed to do, it would have been a way more streamlined, straightforward process for me, because I was determined to do it within a shorter period of time. It was, which it ended up taking ages anyway.
Yeah.
But I do think that am I going to be able to, am I not? You can feel really hard done by as a business owner or a freelancer, whatever you want to call it. It sucks when you've done something that's quite risky and you're trying really hard to do something different, and there's not a lot of reward. But doing your own thing it's challenging at the best of times. And I think that then when it comes to, you've saved or invested and got all this money ready to put into a house, and you do have a successful business and you do have visibility of clients that you're working with or whatever, and then a bank says no because you don't have the things that you need, it sucks. And you just look around at all your friends who are in jobs that are getting paid. Their jobs are just as risky as yours are.
Well, they could get
made
fired
redundant.
Tomorrow. Yeah.
That their business they work in could be in so much debt, and then they blow up and they have to fire everyone.
They could be a terrible employee, be absolutely useless.
Yeah.
And
I just think there's a lot more nuance that comes with this, but the best thing you can do is to arm yourself with the preparation.
Yes.
So we're going to walk through 5 key things that you need to know, think about, and be putting in place if you are a business owner.
Self-employed, freelance, contractor. God, we need to
Should we just shorten it? We can't keep saying this throughout the whole episode. Should we just say business owner? If you're a business owner or you work for yourself. You work for yourself.
If you work for yourself.
Yeah.
Yeah.
We just keep that consistent.
Yeah.
Sorry if everyone that's like, shut
caveating
up.
this whole episode is to do with self-employed.
Yeah.
Contractors, freelancers, okay? Anyone else in a salary job can jog on.
Yeah.
Jokes.
Nah, you
Jokes,
can all
jokes,
listen,
jokes,
but
jokes.
we're not gonna keep listing out every option of working for yourself. And I think before we get into it, I think we should state the obvious that actually buying a house in general, whether you are self-employed or you work in a business, it's really stressful. First house, second house, investment property. It's always going to be.
It's an emotional roller coaster, right? Even getting approval to actually going and visiting the houses to signing the docs. Like, there are so many, I guess, points in that process where it could fall over or it could be a no. And yeah, there's just a lot of ups and downs.
Strap in, you're in for a ride.
Yeah. Try to remove the emotion though, I think is like, it is a transaction at the end of the day. Even though you're like, I really want it. And it's like,
It's not even just I really want it. I think it's this, for me, it was I was quite scared of the unknown. Like, what if I bought a house that was rotting from the inside? What if it's the biggest purchase most of us will ever make. And I think
very few decisions are one-way doors, Sophie.
yeah, but there are horror stories of people that muck it up.
Yeah.
And I mean, we had Gabby Height, this amazing woman who came on and shared her story. Actually, we'll link the podcast again in the show notes because it was quite mind-blowing what happened to her. She was just so what you would assume was prepared, and just it was worst case scenario. And those things happen even if you have the best of intentions and you're trying to be organized. So,
but that's the thing with taking a risk, right? The alternative is you don't buy a house, you save away part of your salary in a term deposit or in the stock market, and you don't take on leverage, you don't take the risk, and you don't grow your wealth as much. And I think that is part and parcel of that fear of, will I buy a dud? All of that. It's like you can only do so much research and box ticking before making that. But there's still a risk involved. It's the same with investing. There's only so much you can research and do and learn about. Sometimes you just have to take the leap.
but I guess that's a really good point, because then you're like, oh, it's not emotional. But actually, it's fair to feel a bit scared because it is risky.
Yeah.
And it probably should feel a bit scary.
Yeah.
Otherwise, if it wasn't, everyone would do it every day. I think also before we get into it, it's just important to highlight, like, the rules aren't actually harsher if you're self-employed. It's just that you need different proof to get the tick of approval. And I think that, that part can be overwhelming because most people in salary jobs, it's pretty clear, bang, 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 these are the things you need. Even mortgage brokers, like, from my experience, if you're not employed, they're not super excited sometimes about or aware of the process. So yeah, I think that the whole point of this episode really is just to try and change the mindset of anyone who is self-employed so that you do feel prepared to be able to buy a house if that's something you want to do. So, number 1, Victoria Harris.
So why do you think it feels harder buying as a self-employed person?
When you are employed, you get your pay packet, you have PAYE, you have your automatic taxes, all that stuff is done for you. It's almost like the beauty of being employed is just your pay packet is kind of taken care of. But it's consistent, it's monthly.
Yeah. And I think, like you said, as a business owner, right, it kind of lives and dies by you if you're the solopreneur. is it the right word? Yeah, solopreneur, entrepreneur. If shit does hit the fan, you're going to cut your salary before you cut staff's, or, you know,
So do you
you're the
think that's
sacrificial lamb kind of thing.
interesting?
Yeah. Whereas some people would argue, oh, but you're so disposable if you work for a corporate, for example. And it's like, yes, that's true. But I guess there's two things that have to go wrong there, right? Your performance and you leave the business and the business has to fall over. Whereas it's all kind of lumped into one when you're self-employed.
Yeah.
You are the business. But I used to get effed off because the flip side to that is if our business did go to zero, yes, we'd probably cut our salaries first, but then we'd cut the rest of the team and we'd still be in there grinding it out till the last hour.
Yeah.
Do you know what I
totally.
mean? We might not
You
be
will
paid.
see us in the coffin.
But then again, I guess we wouldn't be paying ourselves.
Buried
but
at the point of it. No, but,
Yeah.
but the point is that who is going to be working hard to make sure that they can pay their stuff, whether it's their house, their mortgage,
Yeah.
their stuff. It is going to be the person that owns the business. I don't know. It's such a controversial one. But I guess the main point here is that the reason it can feel harder is because your revenue is lumpier, because
Yeah.
you have different amounts coming in. You might have different contracts that are paid at different times. It's just you don't have the same consistency. It's not as easy as on the 15th of every month, you have 3,000 coming into your account.
and you've got 2,000 going out, so you have 1,000 left. Yeah, it's not as easy for the bank to calculate it like that. So there's a few extra steps, which means a few extra bits of paperwork. But there is a huge misconception that it is impossible. But it's not impossible. It's just a bit harder. You just need to, I guess, create a clearer story for the banks around your income, right? It's not as black and white as £3,000 every month. It is a bit more. Yeah, there's just a bit of a narrative. You've got to be a bit creative.
And we're going to get into this in more detail, but essentially, you, not only for your business, but also for a mortgage, if you don't have really good paperwork on what money is coming in, what contracts you have in place, your GST or VAT or blah, blah, like it is so, you are operating as an independent business. And if you don't look like you have got your shit together, of course they're not going to give you money. You know, it's not just as simple as, oh, I'm making some money, look at what's coming in. They're looking under the hood of everything that you're doing. And if it's looking at all like you don't know what you're doing, or you haven't got, I don't know, an accountant helping with your taxes or whatever, those are the sorts of things that you just have to have in place. And if you do have that, it's actually really easy to prove. Over the last 6 months, my income has been X. My expenses have been Y. It's not that hard to share in that setting. Or over the last 2 years or 3 years, this is how my revenue's grown. All those things are really important because you don't have a paycheck coming in on the same day every month. So you just have to work a bit harder to prove your income.
Yeah. And secondly, what do banks actually look at? What do they need? And we just caveated this with like every situation is different, but this is, I guess, the cookie cutter and the standard in terms of what banks look at. And firstly, it's about 6 to 24 months of income stability. So the more that you can, I guess, the lumpier your revenue, the more you're going to have to provide in terms of that length.
Let's use an example. Let's say you've been in your business for 6 months and you've had 100,000 come in. Amazing. Huge amount.
Yeah.
Way bigger than most people in a salaried role. But that's one contract and it's a one-off. That isn't giving a huge amount of longevity or validity in the fact that that's going to happen again.
Yeah.
I think there's lots of things at play here, but it makes sense if you think about it. If you've had one contract, amazing. That's so, so great. But if you actually could zoom out and have, say, 6 maybe retainer clients that have committed for 12 months.
And you can see that consistency.
And they've been with you for a period of time and they're committed for a period of time. Those types of things go a long way. So even if you're maybe only bringing in 20,000 and the other person has 100,000, they have consistency and regular income. They're not relying on one brand.
Yeah. And also, I think the business health as well, even that sporadic 100 grand, is that going from 100 to 50 to 20, or is it going from 100 to 150 to 200 to 250?
Do you mean is there growth within that contract?
Is there growth within the revenue? Even if the revenue is lumpy, is there growth within it, or is it going backwards?
Yeah. And this was something that I struggled with a bit because it was just after we'd done a capital raise. And so we'd raised money on future projections.
Yes.
So we didn't actually have actual data of our new product to prove sales. So it was way harder because what they're looking at is like, you know, your profit and loss, your estimates, your bank balance. They need to understand everything. It's obviously if you're as
if you've just done a capital raise and loaded up your bank balance,
it doesn't mean that you're going to be good at handling it, or no.
They can see through that.
Exactly.
Yeah.
But that's why it was quite frustrating for me, because I was like, this is such an annoying time to be trying to get a mortgage, because we have got proven track record and revenue, but we're also doing a business pivot kind of, and we've just raised for something else. And I had to be really transparent about that.
Which is why, if one bank or one person says no, definitely go talk to someone else, because there will be someone that understands that, right? It's just because every business is so unique and every business owner is so unique. But also they also look at your expenses and your lifestyle. If you're constantly maxing out your credit card and living beyond your means, even for someone in a salaried job, that's a big red flag.
Can we talk about that? Because there's so much misconception around lifestyle and it not being something that they look at. We've spoken a lot on this podcast before about how people think that you spending money on clothes is an issue. Like everyone's like, oh, better cut back on spending.
I'm not meaning
before
that.
My bank.
I'm meaning if you're constantly missing your credit card payments because you can't pay it back and that's impacting your credit score, that's living beyond your means. If you've got constant things on Klarna or Afterpay because you can't afford them right now but you want them, that's constantly living outside your means, and that is
giant red flag.
Well, also if we're going to lump in a mortgage payment now that you have to service every month,
there's
how
an
are you going to do
expense.
that?
What are you going to do?
So I think the more that you can just show that
you're spending less than what you're earning.
Yeah. And there's like a margin there, right? Like it's 3,000, you're only spending 1,000, you've got 2,000 there to play with.
And that's what happens when you apply for your mortgage. And I had to do that as a self-employed person too. It was filling in, how much you're spending on rent, how much you're spending on bills, what other contracts you have. Do you have like a phone contract? You've got a car on license? What is your expenses month to month, and what is coming in on average month to month? And are they adding up that there is space there for a mortgage? That's what they're looking at.
If you've got personal loans, if you've got car financing, if you've got all this other kind of stuff that is a bit of a red flag, then that means that you're kind of living beyond your means. And so, a lot of debt. If you've got one credit card that you religiously pay off every month, that's fine. That's probably good for your credit score, because it's like, look, I can handle debt, so give me more. Give me a debt pledge. But if you're constantly living beyond your means, you've got lots of debt, you can't meet those repayments, you're a high risk person is kind of what they're getting at in terms of, well, why should we lend you money if your previous amounts that you've been loaned you can't control or you can't pay back? That would be a huge red flag for, even if as a friend, if you're like, hey, but can I borrow $100? I'm like, well, you owe Mary, Sue, and John $300 each, and they haven't paid you back.
You've got a great track record, actually.
Yeah,
so no.
I'd be like, sorry, babe, I can't afford it.
You're high risk. You're like, I'm not getting that money back.
Yeah,
you're only going to give someone money if you
give me
genuinely
your phone
believe you're going to get it back.
It's collateral.
Yeah,
collateral.
Chuck me half your wardrobe. I don't trust you.
Yeah.
I think that the debt levels is a really important one. It's also, when it comes to checking your debt and making sure you're not leveraged or owing lots of money that you're not able to pay back month to month. That's one thing. It's really important you don't have a shit credit score. I was really lucky that mine was fine and I was able to, because I've had so many parking fines back in the day when I had to return DVDs and I lost them, and then they put my God.
Electricity bills, and you move flats.
And that's one that stung me. An old flat, there was an electricity bill in my name and it hadn't been paid, and it was a team effort. It wasn't like I was shit at paying my bills. Something just got missed when we moved out, and luckily I was able to pay it off and clear it. But I think all of those types of things you just have to make sure you're up to date with, because as soon as you go in for a screening of a mortgage, they're looking at your financial health and not paying stuff. It comes up everywhere. Like there's no way to avoid that. And for me, that's what happened.
And you can check your credit score if you just Google, free credit checks. There'll be one in your country. You can go on and have a look, and you can see, oh gosh, okay, there's an outstanding bill, and fix it before you go into the bank. So like doing all this stuff ahead of time is really, really helpful. Also, your deposit, I think, is, knowing how much you actually have saved or you can actually put towards a deposit is really good. Usually you'll need 20% of the value of the house as a self-employed person. This varies from country to country, but because you are kind of a bit more higher risk, there tends to be, the thinking is that you need a higher deposit to compensate the banks for that risk that they're taking.
Because you can get lower, you can get 0% deposits. You could get 10%, 5%. There's lots of different places and parts of the world where you can get different deposits. But exactly what Vic just said, you are unfortunately looked at as slightly higher risk, which means you do need to make sure you have enough deposit. But this is something that happened to me. So because I wasn't living in New Zealand, because I was buying, I couldn't buy a home, like a first home. And if you're buying a first home, there's all sorts of things like first home grants. And also if you then live in it, you can have lesser deposit. But because I was living overseas, I needed to go for an investment property, which meant I need 30% deposit, which is quite a lot.
So if you're going in with like 20, that's probably a good ballpark. And then, either you might come out and you need an extra 10, or it's like, woohoo, you actually only need 10% and you've got, an extra 10 up your sleeve.
But remember, you can buy houses with friends, with family members. Like there's lots of different ways to find ways to get a deposit. I went in with a friend. There's no way I would have, in all honesty, my mortgage approval, I think probably I wouldn't have been approved if I'd done it by myself. I think that the combination of having a business overseas, everything was like not ideal. But because I did it with a friend who was in a stable salary job, it sort of offset me as a risk. So it's something to think about if you are also in a similar position where you're probably higher risk. Maybe try and team up with someone that's not. It could be a really good way to get your foot in the door.
Please help me buy a house.
We've had a lot of people message us after I did that saying, I'm in a position where I have money, I have a deposit, I want to buy with someone. If you know anyone that wants to come with me, let me know.
Again, it's just because it's not the common trodden path. It's like a bit weird. People, a lot of people haven't done it.
But where there's a will, there's a way. I strongly believe if you want to buy a house, you can find a way to buy a house.
And lastly, the thing that the banks actually look at is, again, if you've got any big swings in profit. So income, your expenses, and also your profit. If there is all of a sudden a big swing, it's like, cool, but is that just going to be one off, or is that going to be consistently happening? And if it is consistently happening, awesome.
Let's look at number 3. Vic, why don't you run through all of the paperwork that is actually needed to go through and get a mortgage?
Okay, quickfire is, we've mentioned this, they want at least 6 to 24 months of income. So you'll need to actually prove this. So this is like income statements, cash flow statements, that kind of thing. The more that you have, the better. Just bombard them with it, Inland revenue income summary. Oh, sorry. This is just for New Zealand, by the way. This will differ in different regions, but essentially a tax statement from the IRD or your tax agent in whatever country you're.
This is just showing that you're paying tax.
Yes, yeah. And you're not just making up some income statements and presenting them to the bank. There's actually
have an accountant if you have no idea what's going on.
There's actually a stamp on them saying that these are actually valid and viable.
Number 3,
any invoices or contracts showing like future work. So we were talking about the lumpy revenue coming in. If you have signed a 2-year contract, but they've only paid a portion of that up front, you've still got that money coming in the future. Really, really good green flag. Take those along, because this is guaranteed income, which they really like, obviously. And also any letters that you have from key clients, any contracts, anything that proves or de-risks the income coming into the business in the future would be really, really helpful. They're looking for stability, reliability, consistency, all that stuff. So the more that you can provide, the better.
We've spoken about this a bit when it comes to investing in different businesses. And this is if you're weighing up the riskiness of investing in a business. It's exactly the same.
Yeah.
If there are businesses that can prove that their product or their service is needed in the future and they have guaranteed income, like we've spoken on the Curve Weekly, like all of last year about the AI chips that NVIDIA, they had a deal with the government and then this person decided they'd buy that, whatever. It's guaranteed revenue coming in. And so in the exact same way that you would think about that if you were investing in a business, the bank is kind of choosing you as an investment and trying to decide how risky you are. And the more that you can prove that you're not risky, the better.
It's also not this, you're not doing all of this so that you can borrow a certain amount. It's also that you don't have to pay a high interest rate. Because if you are risky, then they can bump up the interest rate and be like, okay, cool, yeah, we'll lend you this, but you're a bit of a risky case, so we're going to increase the interest rate that you have to pay on that debt.
It's a really good point.
The more you can show them, then, the more you can de-risk yourself or your business, the better.
Should we go through some tips for personal spending? Because I feel like banks do like clarity, visibility as much transparency across what you're spending as possible.
Yeah, I think it's really important, if you are thinking of buying a property, the first thing I would do is start separating, if you don't already, business and personal spending. Really, really just muddies everything. So the earlier you can do that, and if you're doing that already, awesome, but that is super, super helpful.
And I think when you start a business from the outset, perhaps it feels exciting to be able to put things on your business card or pay for rent or pay for this. And, and I get that, but there's different ways there's a difference between still being able to do that, but doing it in a really clean way that sets you up for future success or future loans. And there is a big difference between, it's not about trying to restrict yourself, or you might be listening and thinking, well, the whole reason I started a business is so that I could put things against the business and blah, 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 which I totally get. But this is just more of an admin best practice way for any business, really.
Yeah,
like the
bump
more
up your salary and then pay for your personal stuff personally or something.
And obviously an accountant or someone is going to be way more. Every business is so nuanced, so don't take this as gospel. But definitely for us, when we set up the business, the curve, we always set it up in that way where we have super clear guidelines around like what is personal and what is not. Really the only thing that we put through the business that is a personal expense is our phone bill. That's kind of the only thing that I can think of that's not. That's like really clearly, and our phones we use so much for work.
I would say that's a work expense.
It's not even a personal expense, but my point is that's normally the kind of thing as an individual you would pay yourself as your phone bill. Or maybe some businesses.
I've never paid my phone bill.
Really?
No.
Oh, I have. Wow, lucky. That was such an extreme nose
Sorry.
situation. Well,
I've
never
kind
heard
of
you snort.
It was kind of a throat thing.
But I guess this is, it's funny because when we first started the Herb, I remember being quite gutted about it. Like when it was...
Oh, not being able to put stuff through the business.
Yeah, it was just, Vic was really strict with it, and I'm so glad that she was in hindsight.
I think it's also when you have external investors, right?
It changed again in that situation. But even from the beginning, when we didn't have investors, it was not... We were not putting anything that was not...
My mum was like, did you put your car purchase through the business? I was like, imagine. So we're like, where's our profit gone?
Stunning Audi.
I'm like, we needed to pay no tax, so I just thought I'd spend all up.
That's so funny.
But I think it's different also being a sole trader and doing that and being a limited company and having investors is very different. But yes, any investors listening, we do not do that at all.
Vic did not buy her car on the business card.
I absolutely did not.
But they are going to be looking at business expenses. They're going to look at your P&L, your cash flow, like all of that stuff you will have to provide. Yeah. So you want to make sure that you're really happy to show them. And knowing this in advance, right, they're not going to ask for 5 years of statements.
No.
So if you're thinking, right, in 2 years I want to do this, great. Who cares if you had them all muddled till this point, but start to separate it.
Well, and as long as you have, right, if you've only been going for 12 months and you're 12 months, that kind of thing. Number 4 is what deposit is needed. So we touched on this, but usually it's 20%. And it's about that for a salaried person, but there is flexibility to go lower when you're salaried because you are quote unquote less risky. So you can go kind of 10%, 5%, 0% in some countries. But again, if it's your first home versus an investment property, that also makes a huge difference. So if it's your first home and you're living in it, then probably more leaning to the 20% side. If it's an investment property, then it's like you had about 30, could be 40 sometimes.
And I think we were talking about this off mic, the idea of because I said to Vic, because she's wanting to buy a house in the UK, and I said, what sort of deposits are there in the UK? And she was like, you can do 0%. And I was like, wow, that's amazing. She was like, not really. I think that there's a real misconception that putting down a high deposit is scary. Oh gosh, you've put 30% down. Can you just explain what you were saying off mic to me for anyone else that might be getting that confused and think all of a sudden that's actually a really brilliant idea to have less of a deposit? Because really the ultimate, what you were trying to say is the more you can put down as your deposit, actually the better for so many reasons.
It gives you a bit of a buffer, right? Like if you bought a house for 500K and you put down 0% deposit, and then in 12 months' time, that property falls in value to 450K. You would owe the bank £50,000 or $50,000, whatever it is, should you sell that house. Whereas if you had put down 50K, bought the $500,000 house and only borrowed 450, if the house price falls, you're not out of pocket. Yes, it still sucks, but so it's like it's just a bit more risk. If you are going to take a 0% mortgage, I would highly recommend that you add value straight away. So that 500,000
So if it falls,
house is actually immediately worth 700. So
when
therefore,
she means
immediately
renovate, essentially.
Yeah, renovate immediately, or add a bedroom, right? Yeah, whatever.
Just get jazzy with it, so that if you go to sell it, or if the market falls, it's holding its value at least to how much you borrowed, so you're not then losing more money.
Yes, and usually, if you are taking a 0% deposit, you again have increased your risk as a borrower for the bank, so they're going to charge you a higher interest rate.
And it's so easy to forget how much that adds up over time.
Yeah, if you put down 40% deposit, they'll be like, amazing. We'll
give you a 2% interest rate.
Maybe they won't get too jazzy. They'll just be like, thank you. But again, you could shop around if you got a huge deposit.
It's also remembering you're paying interest on the total amount you've borrowed.
Yeah.
So if you've put none down and you owe 500,000, you're paying interest on 500,000.
Yeah.
If you've put a large deposit down, there's a smaller amount of a total, I guess, principal that you're paying interest on. So yeah, there's just different ways to think about it. And I wouldn't get stressed out if, because you're a business owner, you have to put more deposit down. It's actually not a bad thing.
And I think also with being self-employed or being salaried, that the deposit's not really the issue here. It's with business owners. The issue that the banks have is with your proof of income. You know, it's if you've got 10% deposit, cool, they can work with that. If you've got 40%, cool, they can probably work with that too. But it's more around the proof of income, because you're quite a volatile individual in terms of, so that's mainly the sticking point. It's not so much, oh, you need X amount deposit. If you can prove your income, sweet as, then they'll probably be more flexible on the deposit. Do you know what I mean? So, yeah.
Sweet as, bro.
Sweet as, bro.
Sweet as.
Number 5.
Wait, can I tell you something funny? This is just for anyone that's, bored, quick interlude, sweet as. So I went on a date with somebody who told their mum that they were going on a date with a New Zealander. And she said, oh, good luck with her. New Zealanders have the most annoying accent.
Were you like, well, actually, we actually have the sexiest accent?
That's exactly what I said. I said, we've been voted the sexiest accent in the world. And he was like, by who? Everyone in New Zealand. I mean, he was like, what about Spanish, Italian? Like, he started listing all these hot accents. I was like,
it's the Kiwi accent. Number 5, the last one. What will help you get approved? Keeping your accounts clean and organised. Honestly, I feel like we're hitting our head against a brick wall, but honestly, it'll make your life so much easier. And then you can get to the fun stuff of looking at houses. That's the fun part.
If you are thinking, I'm really good at my job, I'm really good at what I do, and I love my business, but if I'm being totally honest, the accounts and the finances is not my strong point. There is so many people and affordable options depending on how big your business is or what you're doing, and software that can help you.
Just talk to other business owners. Who did they use? If they bought houses, I think just
everyone's keen to help.
Do your research and talk to people, and it'll be way, way easier. Someone will be like, oh, I use this software and it was amazing.
I use Henry or Xero. There's so many.
Show consistent or growing income. Pay yourself a regular salary.
This is huge and something we haven't really spoken about yet. Yeah. It's so important.
Even if it's a small amount and you've got the odd bonus or something like that, better to go for the small, consistent amount than the high switch on, switch off, inconsistent amount, I think is really important as well. Because again, they just want to know your proof of income. Can you pay your mortgage? Can you service your mortgage if we're going to lend you this money?
And what is the regular amount that your business can afford to pay you?
Yeah.
And you know what? Maybe it's not monthly. Maybe it's a 3-monthly amount and it's larger because your money comes in huge lumps, and actually it's really hard to do a every month payment. Fine. Maybe it's every 3 months, but actually it's a bigger amount. And that then shows that you'll be able to consistently over periods of time be able to pay your mortgage off.
And the longer that you've paid that amount, the better. So just like investing in a stock, the longer that you can see the consistent profit growth of a company, the more comfortable you can get with it going forward. It's the same when it comes to you as a human.
100%.
Reduce any short-term debt. So any credit card debt, any Afterpay, Klarna, buy now, pay later.
Get rid of it. Get it out.
Yeah, anything, personal loans, any really expensive debt. And by that, I mean things you're paying like 12%, 20% interest rate on.
See you later.
Just so hard to get out of. Yeah.
It's just also, sorry, but if you are buying sunglasses that you cannot afford with your income, what are you screaming to the bank? I buy stuff when I can't afford it.
Yeah.
Just think about it's the same thing. If you were lending someone money, if I asked Vic to give me £500 and she knew that there was actually so many other times that I used £500 when I didn't have it and I still owed other people £500, she would not be feeling that stoked about giving me £500.
I lent a friend some money and I know she hasn't paid back.
How much?
About £100. And
I thought you were going to say something like 50,000
no,
or something.
No. It was just like I paid for something and then I was like, idiot. You know she has a track record of not paying people back.
Oh my God, I know exactly who you're talking
You
about.
know that she owes other people money, so why did you fall for it? It's just lapse of judgment.
Yeah, it's just a moment.
I was like, oh. But anyway.
You're not a bank. You haven't got processes in place to go through and vet it. And if you did, that would have been a no.
Yes, it would have been a no. Having explanations ready for any big dips in income. You know, look, if you're like, look, we actually lost this contract, but we won this massive one. Or I lost this client, but you can see I've recouped it with an even bigger client or something like that, or 2 clients combined, I don't know, whatever it is. Just having those explanations in email from them, in writing, in a contract, whatever it is, just proof of that and evidence will really, really help, because them just taking your word for it is probably
And I guess it comes back to contracts. You know, if something's been cancelled, then prove the new one. Get the new one up.
Yeah. And saving steadily, even if it's a small amount, is really good. You'll obviously need your deposit, but this comes back to living beyond your means. If you're constantly in debt, you don't have actually any wiggle room, that's a bit of a red flag. So, yeah, if you've got any kind of savings, any possible savings, that would be awesome. But, yeah, you need to be an organisational queen.
So off-brand. You never say stuff like that.
Queen.
Slay, queen.
I know.
I wonder if I start saying stuff like slay or queen,
No,
if I'll
please
get
don't.
used to it.
No. Like our Gen Z social media girl, she can do it.
She's not Gen Z.
Well, she pretty much
And she
is.
gets away with it. Why can't I?
Oh, she's little.
she
looks
is.
Gen Z.
She's so cute and little, you're
I
right.
know. Whereas you just, it's like
Big and tall and
the
you can't
boss
say slay.
saying slay, just a bit weird.
But just to wrap things up, for anyone who is feeling, I don't know, a little bit disillusioned by the whole process, it might just be this is the episode you needed to know what to do, and it's just not a now thing. You're going to have to sort yourself out for 2 years' time.
And that's fine. And I think that's better to start now than in 2 years' time being like, I want to buy a house. And
Totally.
Yeah, you're kind of on the back foot. But also, if you do know someone that has maybe given up hope or been told the wrong information,
Please send this episode.
yeah, send in this episode.
So yeah, essentially you just need to understand your income and what the bank cares about.
And the more people, the more business owners, freelancers, contractors we have buying houses, the easier the process will be. And
Totally.
the more banks will be used to it, and therefore, hopefully, more people get approved. Yay!
And just remembering all property journeys, whether you're buying a first home, second home, investment property, they're always different, which is why having the right support, whether it's in a mortgage broker or your bank like BNZ Home Loan Partners, it makes a real difference. And I think that you just have to know that everyone is trying to help. If someone is not helping, find more advice. There's so many people that know more, and the more conversations you have, you'll find the right person that's going to help you make it happen.
And I think it's really important to have those conversations early, right? Not being like, oh, I don't want to buy a house yet. That's a goal for 2 years' time. I think just start having those conversations now. Get prepared. Because you never know. You might be able to buy earlier than you thought.
And I was going to say, if anyone needs a pep talk, like they're, I don't know, feeling exhausted or scared or they don't really know what they're doing, definitely reach out. I'm more than happy to be everyone's emotional support system on this. I think that, I mean, this time last year or a few months, maybe it was about 10 months ago, I was crying on the podcast about this. It was really hard. So I'm talking about this really diplomatically and in a really, non-emotional sense. But yeah, it's a process, and you need to find people you can talk to and feel like supportive. So if you don't have that, reach out, send a voice note. I'm really happy to be, your emotional support through buying a house, because I feel fucking proud of myself having done it, and I really hope that if this is something you want to, that you're able to make it happen.
In comes thousands and thousands of messages.
Don't you worry, I've got nothing better to do
Soph's
than
like,
send
I will get back to you.
millions of voice notes. They
Love
will be
that.
in voice notes though. They won't be long written out messages.
It's funny voice noting people that hate voice notes.
Yeah. I also just find myself as such a cliche where you're like, hi. Oh, there's a cute cat. Oh my God.
Yeah.
I'm hungry. And then, those memes, and it's just that friend that keeps being off track. So then I'll stop recording. I'm like, sorry, okay, focus. Do it
times.
again. Yeah.
Listen to it 2 times. But yes, hope you enjoyed the episode, and we will see you
we actually will see you next month for a new property episode. So if you would like, if there's anything else within the property space that you'd love to learn about, know about, you have any questions, our DMs are always open. Comment when you're listening to this podcast. Let us know, because it's really great to know what everyone wants to learn about. But yeah, have a good week.
See you.
Bye. Did you love this episode?
Yes.
Have you got property front and center in your
Yes.
mind? Sounds like you're a 5-year-old.
I know.
Now could be the time to take the first step towards what it is that you're wanting to buy. Whether that's your first home, whether that's a new flat, whether it's, I don't know, buying another investment property.
And thankfully, BNZ has the expertise and tools to help you get started, and their home loan partners are ready whenever you are.
You can book an appointment, you can ask millions of questions. Trust me, that is totally fine. And you can start turning the property dream that you have into a plan and hopefully soon into a reality. I know from experience that this can feel quite overwhelming, but when you're working with experts who can actually help you get there, it's such a burden off your shoulders to know that you've got the advice and the tools that you need to actually make it happen.
We know how hard it can feel and like overwhelming and just, so like a fish out of water when it comes to buying properties. So we're so thankful to BNZ to be helping us create and empower this podcast so that people can learn, and we just want you all to succeed. We want you all to succeed. We're all in your corner. And this is going to be such a game-changing property podcast series.
Yes, and for anyone that is going through the process of either buying a house or a flat or whatever it is that you're trying to do, please let us know, because we would love to be cheering you on from the sidelines. But thank you so much again to BNZ for empowering this podcast. Okay, quickly, The Curve was created to empower and educate you about investing, but we are not financial advisors.
Our platform exists for educational purposes only, and it doesn't provide personalized investing advice for your individual needs and should not be relied upon to make an investment or financial decision.
And always remember to do your own research before making any investment or financial decision.
We're here for any knowledge and support you need, but the final call is always yours.
And thanks for being here.
You got this.
Yeah, we know you got this.